Market has changed quite a bit since 1792 when 24 New York City stockbrokers and merchants signed the Buttonwood Agreement to form the beginning of the New York Stock Exchange (NYSE). At that time a handful of securities traded hands, including 3 bonds and 2 bank stocks. These days, stocks trade across the globe with markets open at every hour of the day and billions of shares trading daily. The participants in today's global marketplace share a common objective: to make profits and build wealth. Some are large institutional investors making purchases on behalf of their clients. Others are investors buying shares of promising companies. Still others are speculators, looking to profit from the stock market's swings higher and lower. Taken together, the buying and selling of shares among investors and traders causes stock prices to rise and fall. At times, global markets behave similarly. For instance, stocks in the US rise, and the momentum spills over into Asian markets and then into Europe. So-called bull markets occur when optimism is high and investors are buying shares, making prices move up around the world. Conversely, global equity markets may tumble together, such as during the global financial crisis in 1998. Yet there are also times when equity markets in one part of the globe perform well while others perform poorly. In fact, even within one specific market, there are times when some stocks perform well and others do not. For example, during the first half of the year 2005, U.S. stocks put in a mixed performance. Some groups, like companies involved in energy and utilities, did well while others involved in finance and technology did not. 1. Indexes help investors make sense of what is moving higher, what is moving lower and what is simply not moving at all. An index gauges the performance of a group of stocks, rather than shares of just one company. Some indexes are designed to track entire markets, such as Japan's Nikkei or Germany's DAX index. Other indexes are used to track very specific areas of the equity markets, such as the PHLX Bank Sector Index or the Amex Airline Index. As we will see, many of these indexes can be used not only to track the performance of the stock market, but also to trade the market using futures, exchange-traded funds, and options. Prior to putting money on the line, however, traders should understand the investment vehicles well. Successful index traders share many things in common, and 2 of the most basic are an understanding of their trading vehicles along with background knowledge about the index market. This is the purpose of the first few chapters of this book, to provide information about index-based securities along with their corresponding markets. In later chapters, we'll introduce the technical and fundamental tools that trigger trading actions. The first market averages indexes are not new. In fact, Charles Dow developed the first market average, the Dow Jones Railroad Average, in 1884. At the time, the railway was the most important industry of the day. Dow created the railroad average in order to simplify the process of viewing the performance of share prices of the companies in that industry. In other words, rather than looking at the daily price changes of each individual stock in the market, Charles Dow published the average closing prices of the most actively traded railway companies. Since its inception more than a century ago, the railroad average has changed and is now known as the Dow Jones Transportation Average (Tran). It is still with us today, but now it includes airline, air freight, railroad, and trucking companies. Chances are, you've heard about the Dow Jones Industrial Average, aka the Dow, on your nightly television news program. The Dow, the world's second index, was first published in the Customer's Afternoon Letter, the predecessor to today's Wall Street Journal, in 1896. This industrial average was designed to give investors a better sense of what was 2THE Index Trading Course Index, a group of stocks that can be traded as one portfolio, such as the S&P 500. Broad-based indexes cover a wide range of industries and companies, and narrow-based indexes cover stocks in one industry or economic sector. Happening with stocks outside the railroad sector. In the late 19th century, the Dow Jones Industrial Average included the leading industrial companies of the day. Today it is still a widely watched barometer for the stock market. According to the publishers of the Wall Street Journal's website www.wsj.com, the stated objective of the Dow is to represent U.S.-listed equities, excluding transportation and utility stocks. A look back through the Dow. Used as an overall indicator of market performance, the Dow Jones Industrial Average, also referred to as the Dow, is composed of 30 blue-chip stocks that are traded daily on the New York Stock Exchange. See Figure 1.1. Ticker symbols. Stocks that trade on the exchanges are identified by ticker symbols. Stocks that trade on the New York Stock Exchange have symbols with 1, 2, or 3 letters. For example, the symbol for Ford is F, General Motors as GM, and Bank of America as BAC. These symbols are used to view quotes, create charts, and place orders. Indexes also have ticker symbols. However, most quote services don't recognize an index symbol unless it is preceded by a dollar sign. For example, the symbol for the Dow Jones Industrial Average is $INDU and the symbol for the Dow Jones Transports is $TRAN. Figure 1.1 Dow Jones Industrial Average. Source: www.profitsource.com. What did the market do today? What are people talking about when they ask about the market? What do traders mean when they ask, what did the market do today? More often than not, when one of our friends, students, or colleagues inquires about the market, they are referring to the Dow Jones Industrial Average. The latest value of the Dow is quoted widely in the financial press and nightly on the evening news. So what do the daily readings from the Dow tell us? While the Dow once included 12 stocks, through the years the list was expanded to 30. Today, 28 Dow stocks trade on the New York Stock Exchange (NYSE), and 2, Intel INTC, and Microsoft MSFT, trade on the Nasdaq. The most recent changes to the Dow took place in April 2004, when Pfizer PFE, Verizon VZ, and American International Group AIG replaced Eastman Kodak EK AT&T and International Paper IP. Therefore, today, the Dow is not really an industrial average. It is an index consisting of financial, technology, and pharmaceutical stocks, along with stocks from a mixed set of industry groups. By gauging the performance of these 30 blue-chip stocks, the Dow is a daily marker for the American economy. At the same time, while the Dow Jones Industrial Average is used as a barometer for the stock market, it is no longer a simple average. When Charles Dow created it, he simply added the closing prices of 12 stocks and divided by 12, appropriately referred to as the divisor, to get the average. Today's average consists of 30 stocks, but the average is fashioned from a slightly different construction. Rather than computing a straightforward average, using a modified divisor helps to ensure continuity in the average after mergers, stock splits, and dividends. As we see in later chapters, both dividends and stock splits will lower the value of a stock, and an index must account for these changes to the stock price. The 30 stocks in the index, their weightings, and the divisor are shown in Table 1.1. Notice that the higher-priced stocks command a greater weighting within the Dow Jones Industrial Average. It is sometimes criticized for that reason. 4THE Index Trading Course. Blue chip stock. Derived from the game of poker, where blue chips carry the highest value, the term refers to large, mature, dominant companies that dominate their business field and pay consistent dividends. These stocks are often considered less risky than shares of smaller companies because they have less chance of running into serious financial trouble or going bankrupt. A look back 5 Table 1.1 The 30 stocks of the Dow Jones Industrial Average as of May 17, 2006. Current divisor equals 12.49. Symbol name last price weight AA Alcoa, Inc. 33.642.36%. AIG American International Group Inc. 64.054.49%. AXPE American Express Company 52.983.71%. BA Boeing Company 86.406.06%. C Citigroup 49.543.47%. CAT Caterpillar Inc. 77.645.42%. DDE I DuPont de Nemours and Company 44.683.13%. Walt Disney Company 30.352.13%. GE General Electric Company 34.792.44%. GM General Motors Corp. 25.531.79%. HD Home Depot Inc. 38.452.70%. H-On Honeywell International Inc. 43.243.03%. HPQ Hewlett Packard Company 31.112.18%. IBM International Business Machines 82.165.76%. INTC Intel Corp. 0.19.061.34%. J&J Johnson & Johnson 60.254.22%. JP Morgan Chase & Co. Inc. 44.323.11%. Coca-Cola Company 43.843.07%. MC Donald's Corp. 0.34.702.43%. MMM3M Company 86.766.08%. Moaltria Group Inc. 71.755.03%. MRK Company Inc. 35.122.46%. MSFT Microsoft Corp. 0.23.011.61%. PFE Pfizer Inc. 24. 56.901.75%, PG Procter & Gamble Company 56.043.93%, TAT&T 25.771.81%, UTX United Technologies Corp. 0.65.194.57%, VZ Verizon Communications Inc. 31.702.22%, WMT Walmart Stores Inc. 48.073.37%, XOMEX Mobile Corp. 0.61.964.34%. Source: Dow Jones. In sum, the Dow Jones is a price-weighted index of 30 stocks. We discuss a variety of innovative methods used to create indexes, such as the Dow, in a later chapter. Dow theory. Although named for him, Charles Dow did not invent Dow theory. It is based on many of his thoughts and ideas and the use of his first two averages, the transports and industrials. Basically, Dow theory is a tool for gauging whether the stock market is in a bear cycle, a prolonged period of falling prices, or a bull cycle, a sustained period of rising prices, by considering whether the two averages are moving together. According to Dow theorists, in order for a market advance or decline to have staying power, the two averages must confirm each other's rise and fall. The following explanation comes from the Dow Jones website www.dowjones.com. If the industrials reach a new high, the transports would need to reach a new high to confirm the broad trend. The trend reverses when both averages experience sharp downturns at around the same time. If they diverge, for example, if the industrial average keeps climbing while the transports decline, watch out. The underlying fundamentals of the theory hold that the industrials make and the transports take. If the transports aren't taking what the industrials are making, it portends economic weakness and market problems, Dow theorists maintain. For example, Dow theory gave a bearish trading signal in September 1999 when the industrial average rose to new highs but the transportation average did not. Check out the divergence in Figure 1.2. See how the Dow line hits a new high, but the transports line does not. This so-called non-confirmation is precisely what the Dow theorists expect to see when a bull market reaches a turning point. The transports did not take what the industrials make. Dow theory is discussed later in this book in more detail. For now, the reader should come away with an idea of how an index or a group of indexes can be used in developing an outlook for the market. Stated differently, Dow theory gives a precise signal based on the price action of two indexes. It is not ambiguous and doesn't require any guesswork. When trading, this type of clear signal has important advantages. Most significant, it takes the emotion out of the trading decision, which, as 6THE Index Trading Course. 7. A look back. Figure 1.2 Chart of Indu and Tran. Source: www.profitsource.com. We see later in the book, is exactly what trading systems are designed to do. The Nasdaq and the S&P 500 Index. While the Dow Jones Industrial Average is probably the most widely watched market index, the Nasdaq Composite Index $COMPQ is a close second. This index consists of all the stocks trading on the Nasdaq stock market, which includes shares in thousands of different companies. However, large-cap technology stocks such as Intel (INTC), Oracle (ORCL), and Microsoft (MSFT) dominate the Nasdaq. Therefore, the performance of the Nasdaq is often associated with the performance of America's leading technology companies. Table 1.2 shows the top components of the Nasdaq in October 2005. While the Dow and the Nasdaq are the two indexes most widely watched by the mainstream, the S&P 500 Index (SPX) is the most important to investors. It includes 500 of the largest companies trading on the U.S. stock exchanges. On the one hand, the S&P 500 is a benchmark for the performance of the U.S. stock market. It is the index that many professional investors try to beat. At the same time, it has some of the most actively traded futures and options contracts. Therefore, compared to the Dow and the Nasdaq, the S&P 500 index is of greater interest to investors and traders. Nevertheless, all three are important and worth watching. Sector trading. If the Dow Jones Railroad Average was the world's first stock market index, the first average was really a sector index. In contrast to the Dow Jones Industrial Average, which is widely considered a benchmark for the market, the transports track the performance of a specific sector. Today, traders have a wide array of sector index products to trade. In addition to transportation stocks, examples include energy, financials, technology, and healthcare. Furthermore, specific sectors can be broken down into industry groups. For example, technology consists of software, semiconductors, and the other industry groups inventoried in the following list. CME ATHE Index Trading Course Table 1.2 Top Stocks of the Nasdaq Company Symbol Microsoft MSFT Qualcomm QCOM Intel INTC Apple AAPL Amgen Amgen Cisco CSCO eBay Dell Computers Dell Comcast CMCSA Oracle ORCL Starbucks SBUX Symantec SYMC Sears Holdings SHLD Genzyme Gens Yahoo YHOO. 9. A look back. Larly, financials can be compartmentalized into insurance, real estate, banks, and investment services. The other sectors energy, healthcare, basic materials, etc. can also be broken down into specific industry groups. Financials. Banks Major banks Regional banks Insurance Non-life insurance Full-line insurance Insurance brokers Property and casualty insurance Reinsurance Life insurance Real estate holding and development Real estate investment trusts Brokers Asset managers Consumer finance Specialty finance Investment services Mortgage finance. Technology. Computer services Software services Internet software Computer hardware Electronic office equipment Semiconductors Telecommunications equipment. 10. Conclusion. The Index Trading Course. Today, index traders have the ability to trade, not just the entire market through indexes like the Dow Jones Industrial Average, but also specific sectors and industry groups. Subsequent chapters discuss specific index products as well as options. For now, it's important to understand that some of the strategies discussed in this book are related to the market and the major averages, such as the Dow. However, other strategies involve specific sectors and industry groups. In addition, some indexes can be used to track and trade international markets. The world of index trading provides traders with a wealth of opportunities, way too many for any individual to monitor or track. For that reason, the next few chapters not only explain the different index products but also narrow down the list to help the reader focus on a handful of the more interesting and actively traded index investments available today. Chapter 2. The Index Market Today. In the early 1980s, options traders only had one index to choose. Today, the number of available index products is overwhelming. In addition, traders can choose to trade not only popular indexes like the Dow Jones Industrial Average, but a large number of exchange-traded funds (ETFs) as well. With hundreds of indexes available, finding the best contract to trade can at first seem quite daunting. That's why it's important to understand that each index or ETF is unique and will, therefore, behave differently from others. Sometimes the differences are subtle. Other times, the differences are significant and can impact the way the investment behaves from one day to the next. For that reason, it makes sense to understand each product and what factors influence its performance. This chapter kicks off the discussion of specific trading tools by providing readers with a working list of tradable index and exchange-traded products available today. It is designed to give an overview of the index market, and to help narrow down the discussion in order to give readers a manageable list of tradable products. Therefore, readers are encouraged to read through the entire chapter, but not dwell on the large number of indexes. Rather than try to keep track of them or trade them all, which would be impossible, readers should make note of the most actively traded indexes and exchange-traded funds listed near the end of this chapter and later in Chapter 11. These investments are used in the majority of the trading strategies discussed throughout this book. 11. 12. The Index Market. The Index Trading Course. An index measures the performance of a group of stocks. As previously mentioned, the first index was developed more than 100 years ago when Charles Dow computed the average price of a handful of railroad stocks and called it the Dow Jones Railroad Average. The idea was to develop a barometer that might be used to track the daily movements in the key stocks of the day. If the average increased in value, it was a sign that stock prices rose that day. However, when the average fell, the decline indicated that stocks lost value during that day of trading. Today, averages are used in the same way, but there are thousands of different indexes or averages. Each is unique in some respect and each index changes over time. For instance, as we saw in Chapter 1, the Dow Jones Industrial Average (INDU) includes 30 of the largest companies with shares listed on the U.S. exchanges. It is continually being changed and modified to ensure that it includes America's leading companies. A committee at Dow Jones & Company, publishers of the Wall Street Journal, meets periodically to determine which companies should be added to or deleted from the Dow Jones Industrial Average. For instance, in a milestone event in 1999, Microsoft MSFT, and Intel INTC became the first Nasdaq stocks within the Dow Jones Industrial Average. Adding the two technology giants to the 105-year-old index reflected the increasing importance of technology within the U.S. economy. What is the index effect? Changes to an index, like the S&P 500 index, can make a stock price move, and move fast. For example, when a company is added to the S&P 500 index, the share price will often rise. The reason for the large price move is that many fund companies and other institutions try to mimic the performance of various indexes. These are called index funds. For example, there are a large number of funds that hold the same stocks as the S&P 500 index. Examples include the Vanguard S&P 500 Index Fund, which is one of the largest mutual funds in existence today, as well as the S&P 500 Depositary Receipts, one of the largest exchange-traded funds today. When the Standard & Poor's Committee decides to add a new company to its index, the news triggers a flurry of buying in the company's shares. Basically, all of the funds and other portfolios that try to mimic the index are forced to buy the stock. This sudden increase in demand causes the share price to rise. Academics refer to this phenomenon as the index effect. 13. The index market today. In addition, the Dow today includes large pharmaceutical companies like Merck (MRK) and Johnson & Johnson (J&J), financials such as Citigroup (C) and JP Morgan Chase (JPM), and ExxonMobil (XOM), the large oil company. Therefore, although it is still called the industrial average, today's Dow includes a variety of stocks from a diverse set of industry groups and serves as a barometer for large U.S. stocks. In this way, the performance of the Dow reflects the performance of not just one or two industry groups but the market as a whole. Other indexes also measure the performance of the stock market as a whole. The S&P 100 OEX is one of the more popular indexes for options traders. The OEX measures the performance of 100 of the largest stocks trading on the U.S. exchanges. In addition, the S&P 100 index was the first index to have listed options. It became an extremely popular trading vehicle for index traders and was one of the most actively traded contracts during the 1980s. The S&P 500 SPX is also a broad measure of the U.S. stock market. It has one of the more actively traded options contracts today. While the OEX includes 100 stocks, the S&P 500, as its name indicates, consists of 500 stocks. Standard & Poor's created the OEX and the SPX, as well as hundreds of other market indexes. In addition, they make regular changes to these indexes to ensure that they include the largest, most dominant companies in the United States. The Nasdaq 100 NDX is an index consisting of 100 of the largest non-financial stocks listed on the Nasdaq exchange. Therefore, it offers a gauge of the most important companies trading on the Nasdaq. Since large technology stocks dominate the Nasdaq, the NDX is often used to track and trade the technology sector. It's important to note, however, that many traders prefer to trade the mini Nasdaq 100 index $MNX rather than the Nasdaq 100 index. The mini Nasdaq is equal to 1/100th of the NDX. Therefore, when the NDX is near 1,500, the mini index will be trading near 150. The lower value has some important advantages when trading options. This is discussed in more detail in later chapters. The Chicago Board Options Exchange (CBOE) offers options on all of the broad-based indexes. For example, the Dow Jones Industrial Index $DJX is an index that holds the same stocks as the Dow Jones Industrial Average. However, the DJX is equal to 1/100th of the Dow. So when the industrials are near 10,000, the Dow Jones Industrial Index will be trading for roughly 100. While the Dow and the S&P 500 are barometers for the performance of large companies, other indexes have been created to track the performance of smaller companies. The S&P Mid-Cap 400 Index $MID is a popular tool for tracking medium-sized companies. The Russell 2000. 14. The Index Trading Course. Small Cap Index $RUT is the most widely watched barometer for the performance of smaller companies. In fact, indexes have been created around very specific areas of the market based on size, growth characteristics, dividend yields, and a host of other factors. A complete list of other market indexes is included in Appendix A. Sector indexes. A number of indexes have been created to track specific sectors. For example, the Philadelphia Stock Exchange (PHLX) lists a family of sector indexes. The exchange lists a semiconductor $SOX, a gold and silver mining $ZOW, and a bank $BKX index, among others. Table 2.1 lists all of the sector index options that are included in the PHLX. The American Stock Exchange (AMEX) also lists a variety of indexes. Table 2.1 PHLX Sector Index Options. Index. Ticker. PHLX KBW Bank Index. KBW Capital Markets Index. KBW Insurance Index. KBW Mortgage Finance Index. KBW Regional Banking Index. PHLX Defense Sector SM. PHLX Drug Sector SM. PHLX Europe Sector SM. PHLX Gold, Silver Sector SM. PHLX Housing Sector SM. PHLX Oil Service Sector SM. PHLX Semiconductor Sector SM. PHLX Utility Sector SM. PHLX World Energy Index SM. SIG Cable, Media and Entertainment Index TM. SIG Casino Gaming Index. SIG Coal Producers Index TM. SIG Footwear and Athletic Index TM. SIG Investment Managers Index TM. SIG Oil Exploration and Production Index TM. SIG Semiconductor Capital Equipment Index TM. SIG Semiconductor Device Index TM. SIG Specialty Retail Index TM. SIG Steel Producers Index TM. TheStreet.com Internet Sector. Wellspring Bioclinical Trials Index TM. BKX. KSX. KIX. MFX. KRX. DFX. RXS. XEX. ZOW. HGX. OSX. SOX. UTY. XWE. SCQ. SGV. SCP. FSQ. SNQ. EPX. SES. SDL. RSQ. STQ. WHC. 15. The Index Market Today. Table 2.2 AMEX Sector Index Options. AMEX Index. Ticker. AMEX Airline Index. AMEX Biotechnology Index. AMEX Computer Technology. AMEX Defense Index. AMEX Disk Drive Index. AMEX Gold Bugs Index. AMEX Natural Gas Index. AMEX Oil Index. AMEX Pharmaceutical Index. AMEX Securities Broker Dealer Index. Deutsche Bank Energy. Interactive Week Internet Index. Mini Nasdaq 100 Index. Morgan Stanley Commodity Related. Morgan Stanley Consumer Index Options. Morgan Stanley Cyclical Index Options. Morgan Stanley Technology Index. Nasdaq Biotech Index. Nasdaq 100 Index. Spade Defense Index. XAL. BTK. XCI. DFI. DDX. WAY. XNG. XOI. DRG. XBD. DXE. IIX. MNX. CRX. CMR. CYC. MSH. NBI. NDX. DXS. For options trading, the AMEX Airline Index $XAL, the AMEX Biotechnology Index $BTK, and the AMEX Gold Bug Index $WAY are examples. Table 2.2 lists the tradable sector indexes that are included on the American Stock Exchange. The Chicago Board Options Exchange (CBOE) is the largest exchange for index options trading. In addition to trading the market indexes such as the S&P 500, the Dow Jones Industrial Index, the S&P 100 Index, and the Mini Nasdaq 100 Index, the exchange lists options on a variety of industry or sector products. Table 2.3 shows the sector indexes with options listed on the Chicago Board Options Exchange. In July 2005, the CBOE introduced 12 new PowerPax indexes. Each index was created. The market has changed quite a bit since 1792 when 24 New York City stockbrokers and merchants signed the Buttonwood Agreement to form the beginning of the New York Stock Exchange (NYSE). At that time a handful of securities traded hands, including 3 bonds and 2 bank stocks.